Crypto Kids, 96% of traders are going to miss what I'm about to show you. Okay, I'll be honest, I made up the 96% part, but I think a majority of traders are going to miss out on the correlation that we're currently experiencing between the 2019 cycle and the current cycle. I know a lot of people have questions about the legitimacy of the 4-year Bitcoin cycle. People are referencing the 5-year cycle of liquidity, and there's this battle between the two groups. The thing is, the ultimate driver of all markets is liquidity. Bitcoin has operated in 4-year cycles over the past 3 years, and that is facts. Like that's just facts. You've gone in times where you've went from bottom to the top of a cycle over 1,065-day basis every single time, top to bottom, the same time frame for 3 cycles, and you also topped out Q4 post halving year for 4 times in a row. So that proves the legitimacy of the 4-year Bitcoin halving cycle, which is predominantly composed of the 4-year halvings, which is the supply and demand side for Bitcoin. You also have the American electoral cycles, and the business cycles that refers to liquidity has been on par with the same 4 years. This time around, Bitcoin has switched from going into 4-year liquidity cycles to 5-year liquidity cycles. Why? They were supposed to refinance $7.5 trillion worth of national debt this year. But the same debts got rolled over into next year. Between January and June is when they're going to refinance. The Fed adjusted the percentage of which essentially the banks need to hold certain assets to make it more, make the environment easier for those banks to buy up more treasuries. We have quantitative easing coming in, interest rates are going to come down. So monetary policy wise, we are different this cycle. The S&P 500 operated in 4-year cycles for about 2 to 3 decades until it broke off. And I think Bitcoin is likely going to break off of those 4-year cycles in this specific cycle because of the monetary policy, because of liquidity, because liquidity is the predominant driver of markets. So this is Benjamin Cowen's comparison from Into the Cryptoverse of 2019 cycle and Bitcoin. So in 2019, things were a bit different, right? I'm going to talk about this trend line too. In 2019, Bitcoin didn't see a parabolic top when QT ended. Bitcoin just saw a mid-cycle top and then decided to consolidate to the downside. So I think we're probably going to see something like this, where we're going to continue to consolidate. We don't get a COVID-like crash unless something like COVID happens next year, which we cannot predict. But I think Bitcoin is going to continue consolidating to the downside. There is, however, 2 scenarios that I want to highlight once more. And I want to get into the Japanese interest rate, which we streamed over on the Moon Show channel this morning. So when we look into the 2 potential scenarios, in my opinion, of what's going to happen next, well, you either take out the lows created in April of 2025, and this becomes a higher low, and you go into the 200 daily moving average, which is about 107, 108. That would require Bitcoin breaking above this daily trend line at $91.8 thousand. If we can, then I think we're going to go ahead and reach 107, 108. That would be an exact photocopy of what took place in the last cycle, where Bitcoin had a low and then a higher low, and then you created a bounce into the 200 daily moving average, and then Bitcoin plummeted to the downside. That's scenario A. Scenario B is that Bitcoin creates a lower low instead of creating a higher low, and we copy what we did in 2019. And honestly, which of these scenarios is going to be experienced, only time can tell. One thing remains constant, and that constant is that I think Bitcoin will ultimately hit its 200 daily moving average, regardless of if you go with scenario A or B, which would mean that at some point Bitcoin still goes over, I think, 100K before eventually coming down lower. Am I bullish in the short term if we can break above 91.8? But when I go to the intermediate term over the next 11 months, it's just impossible to be bullish. And I'm really sorry to say that. Today we had the Japanese interest rate announcement. They increased interest rates by another 25 basis points, bringing the Japanese interest rate to the highest point it's ever been since the 1990s. How is this going to impact markets? Well, I think most of the move is already priced in. Every time Japan does that 25 basis point rate hike, there's always those fears of trillions and billions of dollars of the Japanese yen carry trade unwinding into the markets. It's the same fear over and over again. A little bit of it gets unwinded each time they hike the rates, because obviously when they do a rate hike, the Japanese yen also loses value, right? People are forced to take the dollars they borrowed. They borrow Japanese yen essentially at low rates. They swap it into US dollars and they invest it into global markets. So to pay off the interests, they need to swap their assets, let's say Bitcoin, into dollar, then dollar into Japanese yen, and then pay off their debt. And they need to do it before the Japanese yen continues to drop in value and before the interest rates go to the upside to prevent any significant losses. That's why markets usually, when you go to 2 to 6 weeks post Japanese rate hike, it leads to Bitcoin and equities going to lower prices. Another reason why I find it pretty complicated to be bullish in the short term, to be honest. But if we can break above that 91.8, then yes, I think we will hit the 200 daily moving average. After we do so, probably a rejection is what's most likely going to come, in my personal humble opinion. Guys and girls, thank you so much for watching this video. If you want to trade Bitcoin and cryptocurrencies, please do check out the links down in the description to get the best bonuses available with our specific exchange partners. Make sure you destroy the like button and subscribe for daily cryptocurrency update videos. I'll see you all tomorrow in a new update. Thank you for watching. Take care. And as always, bye-bye.